Well, hello everybody. This is Michael DeGioia with your weekly market recap from Dash Trader. Always a pleasure to be here with you at the end of an eventful week, and just another week in probably the strangest year that anybody can remember, 2020. And moving right along, it's me, Michael DeGioia, and as always, my co-host Jill Malandrino, global markets reporter here at NASDAQ, there at NASDAQ. And for this week's news, we had the very, very big surprise that the First Lady and the President have tested positive for COVID-19. And I think if the election could have gotten any more unusual and any more additional twists and turns, I think this one certainly added to that pile of already very, very unique election. So, Jill, what are your thoughts about the effects of the First Lady and the President testing positive for COVID-19?
Well, I've made it no secret that I'm a big believer in science and listening to the experts and the healthcare frontline workers that have truly been the heroes throughout this. Wearing a mask works. We know that. We have done a poor job over the past 6 months having any sort of coordinated effort, with the exception of a few states on the local level. And this just shows how masks do work, and that regardless if you think it's weak, if it's a blue issue, a red issue, it's a virus, and a virus doesn't discriminate. And here we are. So I believe the White House is still making masks optional, and regardless of the President and the First Lady, think of all the high-level government officials and military officials that go in and out of the Oval Office in the White House that could have had or have had exposure because they were frowned upon wearing them. That's a big issue. It's a national security issue. I think the fact that this whole entire thing has been politicized is it's disgraceful. It's beyond even words. I mean, Mike, we've been doing this for 27 weeks at home now. We've been talking about the same thing week after week. And, there's a lot of people that have been exposed to it. And regardless of what political affiliation you have, these are still people, right? Whether you like Trump's bravado or not, he still has a family. These are still people, right? So there is going to be some fallout. How it changes the course of the election, I really... I don't know. Even before this all happened, we got nothing out of the debates, right? So it's typically, and historical data will show you this, it doesn't really matter if it's a Republican or Democratic win. It's really hinged upon the economy that's inherited and the policy that's put forward. With the exception of things I've read about, we have not heard either candidate talk about policy, right? And that's what's really impactful. So this week was just awful on many, many levels. I don't know how it gets rectified, but we really need to understand what policy looks like in order for the market to determine what that means. Small business owners have no idea how to plan for 2021, what their supply chains would look like, what imports and exports are going to look like. We don't know what healthcare is going to look like. We don't know what retirement, Medicare is going to look like. We don't know how housing policy is going to be impacted. We should not be wondering what these things look like with 5 weeks out into the election, Mike. So I wish I had something more constructive to say, but I don't.
Yeah, I mean, I'm really at a loss for words myself. I mean, to me, I don't know if it's a positive thing for the president for his election that he got COVID and can say, look, I got it and it wasn't that bad. I got it out of the way. I don't think maybe it's a bad thing that he can't go out and campaign and that gives Biden an upper hand. Besides for the fact that they haven't spoken about policy, I mean, that brings me to the next topic, the presidential debate, which was probably the worst presidential debate that I've ever seen in my entire life. I mean, I don't even think they discussed anything. They just battered and bludgeoned each other and talked badly about each other. I mean, that seems to be the case. What was your thoughts about the first presidential debate? It was just basically them arguing for an hour and a half.
Right. Agreed. I don't know if that was Trump's strategy. I have no idea. I mean, we couldn't even get through the first minute. I don't even know. It was just awful. And again, it kind of always brings me back to national security. Our adversaries are watching this. And if we can't even fix what's happening here internally, how do we look on the world stage? So I think it's even more than just a red or blue thing or a Trump Biden thing. I think we really should show some concern here. I also want to go back to COVID-19 for 1 second, something I wanted to mention. So if you listen to science and medical health experts, which is how I lean, it takes a good 6 to 8 days for the virus to be present. So while when they debate Tuesday night, I guess Biden got tested this morning, it's still, just because he's negative doesn't mean that he won't be positive a few days out. And it's not just Biden, it's all the donor event that he went to. Anyone else has had exposure. So it's not like you're necessarily out of the woods yet, which is why healthcare experts recommend quarantining for 14 days, because you need a good week for the virus to present itself. So when we think about the debates, I would imagine everything will be virtual. I would imagine that they're probably, and I believe this has been announced, they're going to reframe the way that they are moderated to avoid that going forward. I'm not quite sure how you hold someone back.
I thought he did a terrible job moderating. I mean, there was no.
What choice did he have?
You could have requested that the mic be shut off while one person is speaking. I mean, that's one way that you could handle the moderators, right? You can shut off the mic. Say, look, yeah, sir, I'm going to have the mic.
I mean,
if you don't control it.
You could, but we are talking about the leader of the free world and a candidate who wants to be the leader of the free world, and you should not have to do that. That's the issue, right?
I think I agree with you that is absolutely the issue, is that we shouldn't have to do that. But in the case of moderation, I mean, I didn't think he was a very strong moderator. And I think Trump and certainly, Biden taking jabs at Trump taking jabs at Biden. I mean, Biden was just calling him names from the very beginning, and Trump was just basically responding and calling him names back. It was like two kids in the playground. So,
yeah.
But I mean, very, very disappointing overall. So, and what's been lost in all this is policy. Obviously, presidential policy is, what the presidents and the presidential candidates are actually planning to do afterwards has been lost in all this. And on top of that, nobody's even talked about earnings season. I mean, I haven't heard much. I mean, obviously, I've heard it on the financial networks a little bit about earnings season. But what do you expect? What are your thoughts about this coming earnings season for the third quarter?
I had a number of strategists on this week, and we're finally starting to talk about it a bit more because, okay, so we have the election, we have COVID to deal with. Oh, and by the way, earnings kicks into high gear, right? It was almost an afterthought just because they're contending with so many other things. I don't think anyone's expecting, blowout quarters and really it's going to be guidance going forward. And I know we've said that obviously guidance going forward is going to be key for any quarter. And we certainly said that for Q1, we said it for Q2. We're going to hear about it again because it's just a very uncertain environment. And Mike, as we've spoken about, this market has, even the way it's traded has been very different than every other idea. We have so many more participants coming in now. We have so many users of options. It seems as if stocks are being traded on momentum and trend versus fundamentals and what you see on the charts. There's stocks that go from like $2 to $42, and maybe they only guided that they're going to add another $5 million on revenue in the year. It's very bizarre. It's a very momentum-driven market. So I wonder how much fundamentals will matter.
No, it seems that way. It seems like this is a market that has a mind of its own and it's operating off of momentum. So on speaking on that note, let's take a look at the charts and see what the markets are telling us from the technical perspective. All right, so first chart that we're going to be taking a look at here is the QQQ. And one of the things that we can see here on the QQQ is that we made a big move off the high. We've made a significant move back up. And certainly we've come down a little bit with the news about the president and COVID-19. That was the gap down this morning. We did rebound up pretty nicely, thereafter. But certainly if this puts in a lower high, it's a rejection of a move back to the upside. And that would be bearish. And the QQQ is kind of almost a flight to safety trade. in that, many people believe that whatever happens with COVID-19 going forward, that technology is going to do better than the old economy. On the SPY, we pretty much have the same chart. It's just not as extreme, meaning that the chart is, basically it's put in a high, it's put in a lower high, and it looks like it's attempting to put in a third lower high, which would be bearish. And price is basically just about going underneath the moving averages. And finally, the DIA is a high, a lower high, and a lower high. Okay, we got 3 lower highs. And then finally, we're stuck there at the moving averages, and we just go on from there. And it looks to me like the DIA it has a head and shoulders formation. This is one shoulder. There's the head. This was the neckline break. This is the snap back to the neckline break. And then possibly we move down from here. The gold looks like it's the almost kind of made a little pullback here to this level, and then obviously it's been moving up thereafter. And gold actually continues to look bullish, like a bull flag. A bull flag formation is a bullish formation. It looks like it could make another run up, probably on the GLD break 194. If it breaks 194, probably go to about 200, 210. But obviously it has to get above 184. Is that 184, 185 is the big number for the for GLD and gold. Next, we got Apple. Obviously, Apple putting in a high and then putting in a lower high. And then we have Amazon, high, lower high. Okay, pretty much technology across the board with very few exceptions. They all look like they're starting to turn into a more bearish direction. One thing I've noticed in my 22 years of technical analysis is that when things go bearish, they go bearish together. Apple being more bullish than bearish because it's closer to its moving averages. But if you look at the moving averages on Amazon, Amazon is more bearish than Apple. It's gone deeper down below its 50-period moving average, and its moving averages are more consolidated and more clustered together. Google is more bearish than Amazon, meaning it's already gone deep below its moving averages. It's rebounded up, and it's below 2 of its short-term moving averages and even its long-term moving average. The one exception to the rule is Netflix. I'm not sure, was there some big news on Netflix, or is it just that we think that pandemic round 2 is just going to benefit Netflix? I'm not sure why Netflix is looking so bullish here.
Neither am I, but I would agree. Yeah. I would agree with your sentiment. I mean, we saw it with a couple of the work from anywhere stocks this week as well. So, anything related to internet, cloud, and I think, the narrative that I've certainly been hearing, and one that I definitely agree with, is this isn't no longer the work from home trade. It's a work from anywhere trade, because we are going to exist in a hybrid environment going forward. We understand what we can do virtually. We understand the cost of travel savings. We understand the decline of our carbon footprint by not traveling as much. And I think this is really going to be the way that we do things as business, as education, healthcare. So these stocks that connect us via the internet, the cloud, and these newer technologies, they're here to stay. It's not a COVID-19 phenomenon.
No, I totally agree. I think Netflix is bucking the trend, and I think it's the Robinhood traders thinking that Netflix is going to be the big beneficiary for round 2 of COVID-19 as cases start to pick up around the world, especially in the northern hemispheres. We're starting to see a drop in cases in places like Brazil, and of course places in the northern hemisphere like England, France, you name it, England, France, Spain. Those numbers are starting to pick up. Obviously, New York is opened up a little bit. New York's numbers are increasing as well. So you can actually effectively call the start of a round 2. If the numbers continue to increase in New York, then of course it's going to be round 2. And what are people going to be stuck doing? Sitting at home watching Netflix. Now, the one that's interesting here is Walmart. Walmart's broken out to new highs. It's breaking out even higher. And it really seems to be a beneficiary of COVID-19, regardless of the fact that it has bricks and mortars. It's done very well online. Walmart seems to be the exception to the rule here. What are your thoughts on Walmart?
Yeah, I would agree with you. They were very smart by putting money into their digital strategy. And as we say, when you invest in R&D, you invest in growth areas. That's what sets you up for growth. And certainly that has worked out well for them. You have to remember too, while mom and pop stores were shut down, stores like Walmart and Target and Home Depot were deemed essential. So people had no other option to shop but at these stores until we got the smaller businesses back open. So that means consumers got very used to e-commerce. They got very used to what's called BOPIC, buy online, pick up in store. And again, I think those trends are here to stay. And I don't think that they're going to go anywhere quickly. I mean, we've learned how convenient things are. You can either get them virtually same day or the day after. And consumer habits have certainly changed. They were going to change. This just accelerated trends probably 3, 5, maybe even 10 years forward.
Yep, absolutely. Now, the one thing I mean, it's obviously, we know why ExxonMobil's going down. COVID-19's picking up again. People aren't consuming as much oil. They're not traveling as much. The whole world economic slowdown. But to me, I think that there's a great value proposition here at ExxonMobil. I mean, it's just completely obliterated. It's back almost to a double bottom on this chart. And to me, I think obviously, we have to keep an eye out and continue to watch these stocks. But this is a stock that has a great dividend, great value. I mean, eventually, people are eventually going to go back to work. I'm not sure why ExxonMobil is getting completely obliterated here, besides for the fact that the global economic slowdown and maybe all the storms too. All the storms, we've had a record number of storms this year. What are your thoughts and feelings on ExxonMobil?
Well, the energy space, I think, is in for some more pain. Certainly, COVID-19 and the total lack of demand impacted that. The key here is there's a couple of things. We never got that summer demand driving season that we typically do. And typically, the refiners will shut down for what's called turnaround season in the fall. So you have that. But there's just no corporate travel. There's just simply no demand. You have the Saudis turning on the spigot a bit, which did not help. And I also think, and then we saw it in price action today with the White House reporting the First Lady and the President having COVID-19. We just don't know what that's going to look like. If people start to recognize that this is something that's here, it's not going to go away until there's treatment, and they just get scared. Because, Mike, the whole thing is that I don't care who's walking around saying, you don't need a mask, it's fine, don't worry about it. Businesses can reopen. If consumers don't want to consume, if they don't feel comfortable in restaurants, casinos, if they don't get on a plane or a cruise boat, it doesn't matter who says what. So until there's any pickup in demand, particularly on the corporate side, oil, they just can't afford to continue operations. You're going to see a lot of the smaller outliers either be picked up or go the way, of bankruptcy. But if there's no demand and too much supply, it is what it is in oil right now.
Yep, absolutely. So moving right along, we got Ford Motor Corporation, another one that's done. I mean, they're probably the strongest of the U.S. automakers. They've done fairly well up until now in terms of recovery. I mean, certainly they're not at the pre-COVID levels. But another company that I think that people should look at is Ford Motor Corporation. They seem to have weathered the storm pretty well. And, it's the chart doesn't look great, but certainly something to watch going into earnings season. The reason I say the chart doesn't look great is that it put in a high, a lower high, and a third lower high, and now it's below its moving averages. Now, talking about a bad chart, we have American Airlines. American Airlines putting in multiple lower highs, and those multiple lower highs certainly will, they're looking for additional bailout. They've just laid off a whole boatload of people. I would expect that this is going to be a terrible set of earnings this quarter. Any thoughts on Ford Motor Company and American Airlines?
Well, Ford Motor is interesting because it's a dividend play, and a lot of managers own it for that reason. In fact, Mike, this is really interesting. SoFi launched a new ETF this morning, and it's a dividend paying ETF where you are guaranteed a dividend payout every week versus quarterly. And I don't know the exact methodology. I caught bits and pieces of it, but apparently it pays to what the equivalent annual yield would be of about 2%. Now, 2% isn't high, but relative to other fixed income products out there, it is higher. So, you're always going to have the dividend story there. And of course, if they start to invest more on the EV side, that will help as well. And then what was the other one that you said? American Express? Airlines.
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 We're looking for bailout.
Well, the thing is, when Pelosi had commented that they are going to pursue some sort of bailout package, I mean, we saw, what was it? I think it was Jets is the ETF. It was down like 3% on the morning. And then once, that statement was released, I think it went up to like 1.8%. So right now, I feel like the airlines are really trading on stimulus A and to demand, and 3, of course, just like with oil, it's going to be all about corporate travel, particularly for airlines like American, for UAL. JetBlue, Southwest is probably, I don't want to say a little bit safer, but they have more of that domestic travel market, whereas UAL and American certainly have more exposure on the business side.
Exposure, yeah. They have a lot of international exposure. So, I mean, I think they certainly took it on the chin on this one. All right, well, that brings us to our mention of the full intermediate trader competition. Competition runs through Sunday, October 4th. That is this Sunday, so you only have 2 days left to register. Competition runs from October 5th to October 16th. That's 10 trading days. The cost is only $150. Ticket price covers the period of usage, that you're using DAS, and you get the DAS software and you get market data. So with your $150, you get to use your DAS Trader platform on paper trading mode. And you can visit number1besttrader.com for information and to sign up. The winner's name will be displayed on the NASDAQ market site tower in Times Square. We'll be a guest of Jill on Trade Talk show for an interview. We will have a virtual luncheon that is paid for by DAS, and you'll sit with a top name trader during that luncheon, talking about getting your trading questions answered, and certainly being able to ask questions about your own trading, etc., and their trading and trading experience. You also get 6 months of access to the DAS Trader platform, whichever broker you're using. And of course, certainly our October newsletter has just been sent out. We've been talking about this possible pullback, and we finally got it. Been mentioned in the October newsletter. If you did not receive emails, you do not receive emails from Dash, you can sign up at the bottom of our page at dashtrader.com. Dash Trader Pro channel has a new educational videos. I'll be posting some options videos in very short order, just doing some finishing touches on those. So stay up to date with Michael DeJoy and me as I share different features about the Dash Trader platform. Subscribe to our YouTube channel, Dash Trader TV, and certainly all of our social media outlets, LinkedIn, Dash Trader on Twitter, Facebook, and Instagram. And that's all she wrote. Jill, I hope you enjoy your weekend. As you can see, I already can enjoy my kind of hallucinogenic life here in this terrible place that I'm in Istanbul, Turkey. I'm coming to you today from Istanbul, Turkey, and certainly I have a very interesting ceiling above me. But needless to say, have a wonderful weekend, and bye-bye, everybody. Thank you for joining.
See you guys. Take care.